Street traders, 9/12/2010, 9:42 a.m. Pacific Standard Time. What we're going to be looking at is that FedEx is the leader of the Dow transports. Okay? And what we're going to take a look at is that they report earnings on September 16th of year 2010. That just so happens to be the options expiration that starts September 13th, which is tomorrow, and ends Friday on the 17th. Now, everything that we talked about on the FedEx daily, monthly chart and the Dow transports, you already have those videos, so we've already done that. We don't need to talk about that again. Go back and look at those videos, and if you're an innocent bystander coming across one of our videos, that's where you would start as well. What we do want to tell you is the put and call ratio for this expiration and earnings report. We had 1,525 $85 calls trade. That was on Friday. The high of FedEx just so happens to be on lower volume, 1.16 million shares. The high was right there at resistance at $85 that we showed on the monthly chart. We are also going to be looking here at the same strike price, but it's a put. It's an $85 put that hit a low of $1.74 on Friday and went up to $2.20, up 9 cents on the day, and this one was only up a penny. The most important thing about the trade is where the economy is. FedEx has given mixed guidances, and the last 4 guidance updates starting on June 16th, fiscal 11 guidance was mixed. It was at 440 to 5. The June 16th, 2010 Q1 ending EPS estimates of $1.03 back then. That came in line 85 to $1.05 in that report mixed guidance. The July 10th on the 26th is EPS earnings per share is what it means is 4.98, but it was mixed guidance of in line at 460 to 520. And then they tried to come out and talk about their Q1 EPS of $1.01 with upside of $1.05 to $1.25. But the revenue that I'm talking about, the mixed revenue, is the mixed part is the revenue part. Now that Q1 EPS of $1.01 was $1.05 to a quarter, which was slightly upside, where we've got 2 in lines and a downside as well. So the revenues have been very mixed because earning per share and actual revenues are different things. So we won't talk about that here, but we will talk about it the day that they report on September 16, 2010. What we're going to look at is, does FedEx, the call side from 33 cents, and I'm going to show the call side, so let me move this out of the way, SMF Street, for the options expiration, is or was at 30 cents. The high of the contract on 9/9 was $2.24 on the call side. So that was a huge move, which put that percent-wise in an inflated bracket when it comes to being a market maker in the option pit. Remember, day trading options and the way that SMF Street trades options are 2 different ways, 2 different altogether methods, 2 different of everything. Because basically we're always taking the mathematical imbalances between strike prices. There's a very finite pricing mechanism control system and these options at these strike prices. Basically, I got deflated down here on the $85 put, and that deflated low was $1.46. I've been re-leveraging up ever so slightly. They gapped it up to the low of $1.74, and that high was $2.20. We're going to be taking a look if the equity chart or the equity itself either sells off going into the earnings, or do they walk the price up into the earnings, and what their guidances are going to be. This can be a very huge trade by knowing how to weight the $85 call and how to weight the $85 put. That puts the SMF Street in a position to take the winner at the higher end and cut the loser at the lower end and end up with a great spread as far as dollar cost profits go. So basically, between the 13th, 14th, and 15th, depending on which way the equity moves, is where we're going to get our entries. Once the SMF Street trading video is concluded right now, I will be giving Scotty the prices along with the other MMTs off of the video. And we will take this trade. If they give downside guidance, you're going to fall about $3.50 to $4 on a gap down. On the other hand, they're reporting the quarter of what transpired the last 90 days. The most important thing that you'll learn here as an SMF Street trader in our school is about the stock fundamentals and which way the forward-looking outlook into 2011 and the remainder of the 2010 earnings look like. Because I could beat on the top line and the bottom line, and they could pop the stock like they always do, and we always short them, but then when they come out on the conference call, they say, hey, things look a lot weaker than we anticipated, and there down goes that stock and hard. And remember, when we looked at the Dow Transports, we're taking the leadership in that Dow Transports could not break resistance on a monthly, weekly, and daily chart. FedEx has to lead the Dow Transports higher. It's just like Google being a leader in the internet sector, and so is Apple. They've got to lead higher. They've got to break higher. The quality, the market cap, this one here has a lot to say. And fund managers around the world are going to be looking at what that forward-looking guidance is. And remember, once again, GDP was lower. It's going to be reflected in that earnings report. I'm going to conclude the tape on the options. Then I'm going to give out the prices to the MMTs.